for joining us today for this discussion on scaling your fintech in time of crisis. Mission possible or impossible? I'm Ieva Paulauskienė, Fintech Investment Advisor at Invest Lithuania. Invest Lithuania is the official agency for foreign direct investment and business development, helping companies to discover business opportunities in Lithuania. I have a huge pleasure to be moderating this session today. Fintech businesses have made an extraordinary impact in the past 5 years. When reacting to the pandemic situations, fintechs were among the first ones to respond to the pandemic situation by introducing new solutions to help the clients and customers. But the main question, how does the next potential fintech giant can navigate all the challenges of scaling and growth, not only in the light of the current COVID-19 situation, but even be prepared for any other upcoming pandemic crisis? Today, you will hear from fintech company leaders on how the companies are adapting to the changing world and what approaches they take in fostering collaboration, securing funding, and reshaping businesses in response to this crisis. So I would like to introduce my panelists for today. First of all, I would like to introduce Sigutė Kuncevičiūtė, CEO of SumUp EU Payments.
Hello, everyone. Nice to be here. I'm Sigutė, CEO of SumUp EU Payments. We are part of SumUp Group. Our product is a mobile payment solution that we deliver to our customers globally. We are one of the fastest growing fintechs in the European Union. And definitely thanks for having me here. Looking forward for the discussion about the recent changes within the markets and businesses due to COVID impact.
Thank you, Sigutė. Next, I would like to introduce Stefano, Vaccino, founder and CEO of Yapily.
Hello, everyone, and thank you for having me today. Yapily is a tech company that plays in the open banking space, and our objective is to remove the technical barrier for anyone that want to benefit from the open finance revolution. So our objective is to make connecting to bank easy.
Thank you, Stefano. And finally, I would like to introduce our third speaker today, Nigel Verdon, co-founder and CEO of Railsbank.
Hi, and thank you for the invitation to talk, and welcome to the audience. So my name is Nigel Verdon. I'm the CEO and co-founder of Railsbank, and it's my third fintech I've founded within and led through the first one through the dot-com crash, second one through credit crunch, and now COVID. So luck seems to follow me. Railsbank's goal is we're a global banking as a service platform, and we're the only global platform that's there today. And our goal is to enable any business, brand or bank to become a fintech and participate in this new world of embedded finance.
Thank you, Nigel, and thank you all for joining us today. So without further ado, I would like to kick off the discussion with the first question actually to Nigel. Nigel, you already mentioned that you were leading startups through different crises, and you are one of the most experienced fintech leaders. And at this stage, you're also leading Railsbank. Even in times like this, Railsbank is growing and expanding into the new markets. So as a leader, what key actions did you take not only to mitigate the crisis, but actually accelerate the fintech growth in the time of crisis?
Sure. Thanks for the question. The first thing is we got control of our costs, and so we're very clear on understanding costs. Get a new plan in place and a bearish plan that says nothing's going to happen over this year or declining, and so you've in the back of your head, you actually know where your cash flows are, and cash is the most important thing in this, especially in downturn. Next most important thing is engage even more with your customers, because your customers help you through. And I remember in dot-com crash, we had two big customers called Goldman Sachs and UBS, and we renegotiated with them, and they helped us through that crash. So customers helping them be successful helps us be successful, and that was the approach. And in terms of growing in this. I think downturns for young companies without handcuffs or without huge legacy cost bases, we have massive opportunity to all of us here on the call because we can invest when others can't. In terms of growth, and I think COVID has made a very, very clear sort of partition between what we call the digitized world, which is people who have basically figured out that digital change means having a PDF, but it doesn't actually mean that. It just the PDF is no use to you whatsoever. And the digital natives, like all of us on the call, who, for example, we sent 127 people home to work from home in February, and no customers were impacted, and customers didn't even realize we were working from home. Look to some of the legacy financial services, they've still got to go into machine rooms, they've still got to get security infrastructure, all those type of things. So I think the opportunity is we're all digital natives, we can all operate as distributed companies, we're all cloud natives, and so we can carry on operating and growing. And this year we had our best ever quarter in Q1. We grew 10% in April on Q1 and grew another 10% in May, and looks like we're going to have a record June too. And it's because we can operate in this world where it's the, as I say, the non-PDF world. It's actually a true digital native world.
Thanks, Nigel. Actually, I couldn't agree more that, it's no longer the PDF world and you just need to be more and more agile. But just wanted to touch another point. So what do you think, which qualities are more important to a good crisis time manager? Is it a quick reaction or deep analytical thinking, that you can evaluate the situation? Because it seems that, you were very quick, to respond to the situation, but, sometimes companies need also do some analytical thinking.
But you've got to think, and you've got to think with the data you have in front of you. And I think a lot of people get into analysis paralysis because they're trying to overthink. And there's criticism of governments doing the wrong decision, but hey, you've got data, you've got a very small amount of data, you've got to make a decision on it, you can change your decision later. So decision making with data and some planning, etc., is super important, and making decisions fast. And nobody should be shot for making the wrong decision, because we're humans, we do what we've done with data, but super fast changing it if you need to. It's if you just keep to your path. Everything is changing on a daily basis here. We've seen all sorts of events happen over the past 5 months that we'd never seen before in our lives, and everything. And so you've got to work out, figure out, change, go forward. And that's a massive advantage of being a digital native and be a smaller company. You can change quick. You don't have to wait for the super tanker to move while you're trying to get a curve. We can move and take opportunity quickly. So I think it's a combination of thinking and preparing. Preparing is the analytics side. And so having a plan, you can just change some of the data in it. Say, okay, that's what my cash flow looks like now. I can re-go and change. I can go into growth. I can invest instead of hunker down. So it's a combination of both. They're both equally as important. But don't overthink.
Yeah, don't overthink. Stefano, you are leading the enterprise connectivity platform Yapily, and you already have recently successfully closed a funding round. Huge congratulations to that, and still hiring. So what were the key steps in organizing your top leadership's response to this crisis and growth strategy? Could you share the lessons you learned with our audience?
Yeah, of course. Thank you for the question. So I will not maybe touch on points that Nigel touched, like analyzing your cost or being close to your customer. So from our perspective, we saw the current situation as a potential to catch up with some other player in the space. So that's why we keep growing, and we have not changed our growth plan. So I would say probably there are 3-4 suggestions or lessons learned. first, actually, what also Nigel was saying, be prepared as a company in general, and be prepared for the worst. As a company, obviously, we had business continuity plan in place when the crisis hit. So even before the government imposed the lockdown, we were already working on a Team A, Team B configuration. So when the lockdown was imposed, it was very easy for the team to migrate on a fully remote, let's say, way of operating. The productivity actually of the team has increased in the last few months, and we learned a lot of how we could let's say, operate in the future. We were forced in this exercise of working from home, and we learned a lot about, let's say, ourselves. The second point is, from a leadership perspective, as what I found very important is stay close to the team. Working remotely during one of the biggest economic and health crises that many of us will witness during our life require a lot more empathy than what you require if you actually see your colleagues every day in the office. So personally, I've been reaching out, chatting and talking to all of my employees on a regular basis, all of my colleagues, and we are more than 50 people, so I made sure that I was spending time with each one of them, but also organize more events than we were doing before. So we had from quiz to master chef to running squad, so trying to be closer even if you're far. The third point is ground communication. Over communicate, it's a general rule, but I guess in this situation it was even more important to make sure that the team knows what was going on, and we had even more sessions during which we were sharing with the team our plans. So the last point probably for us was, from a leadership perspective, was never stop. We didn't change our objective. The energy has remained the same. So this led to the team to keep driving in the same direction rather than in the volatility of the situation, maybe being a bit lost. So we didn't change, let's say, our vision and direction for the company.
Yeah, so vision and direction is very important in the time like this. Sigutė, I have a question for you. You manage Lithuanian subsidiary of SumUp, which is one of the leading card payments processing companies with offices in 3 continents. What organizational changes have been implemented across your company globally to respond to the COVID-19 pandemic? Might there were specific actions that were taken in Lithuania?
Yeah, thanks for the question. As you correctly noted, we have global offices in worldwide locations within the company. Nevertheless, the same measures were implemented on all the group level companies. The first thing we did, and I'm pretty proud that we were proactive when making these steps. So we reviewed our key priorities because our main customers are the small, medium enterprises that definitely suffered from the lockdown. I will not go into the numbers, but they the decrease was definitely impressive, and we understood very quickly that we need to do something in order to help our customers. So what we did, we reviewed the priorities, we reviewed our product roadmap, our future plans, and allocated the resources to the main initiatives that we thought will help our merchants throughout these difficult times. I will not go maybe into all the details, but we managed to launch products to the market in a couple of weeks that, in fact, in the roadmap were planned to be launched in months. So I'm really proud how the team were kind of able to structurize themselves and working remotely accomplish that. And what is also important, the lockdown was impacting the global offices also from working from home perspectives, as other panelists were indicating. It's, I mean, we were remote teams already, but working remotely definitely required to review our kind of internal communication ways, all the rituals we have, and etc. But again, I think we are in this for a long haul. I mean, overall, the business and the way we do business is changing. So being reactive, watching the situation closely, and thinking about new methods, new products will be key for the future, in my eyes. And we are trying to accomplish that in being by, at the same time, being pretty big organization.
Yeah, thank you for sharing this. I guess, every company is already having more and more data that helps to evaluate the pre-pandemic situation and, the post-COVID situation. So I guess this brings me to another topic, funding, which is also a very important topic for the companies. So I would like to dedicate my question to Stefano. Your team have secured a successful Series A funding during this coronavirus crisis. Could you share your experience with us? How was the funding process different from, let's say, the normal investment raising?
So certainly raising during the COVID crisis was more challenging, and I think the first reason is because I had COVID myself. So during the week of the signature, I had actually pneumonia, fever, headaches. So a funding round I'll definitely remember. But in general, the process went, I would say, quite smoothly. And the advice that is something that I guess you will hear from many founders is to raise when you can and not what you have to. In our situation, the reason I'm mentioning that is that we were not planning to raise until April, May. And so in January, while I was catching up and sharing my plan with Lakestar that invested in us, they thought about making us an offer. The offer was great. Lakestar was a fantastic partner, so we didn't think it twice. So the process actually went super smoothly because we met them January, February we signed the term sheet, and March we closed the round. So my advice is, whenever you find a stellar partner, from a let's say founder perspective, don't think about maximizing valuation, maximizing timing, waiting 3-4 months. It's all about maximizing chances of success for the company.
Yes, this is a very good advice, for the future fintech leaders, or the ones who are willing to start the companies for themselves. Nigel and Sigutė, I would be keen to hear your thoughts on this. How do you think the funding landscape will change? Do you have anything to add? Maybe start with Nigel? Nigel, right, you can unmute yourself.
Apologies, I had mute on. Well spotted. No, maybe a lot of things that Stefano was saying, very true and wise words. And Lakestar, great investor. We are capital raising. I've literally been talking to around 52 funds at the moment. And bizarrely enough, a good 85-90% of those have all been inbound over the past few months. So the people are investing at the moment. Each one I've talked to is writing checks. The difference is the first part of this first part of this half of the year, most funds were focused on defending their portfolios, working out, getting plans for the portfolio companies, making sure the LPs were clear whether they made capital calls, etc. on them, and so I think deemed not to be investing when they were investing, but their focus was elsewhere. So the other one is there's a sort of split in two. Some are writing some very big checks, and only having met the founders on video, on Zoom or one of the other products. And others are making smaller checks on Zoom and then with a view to a larger check next year. So it's changed some of the dynamics of the industry. And I just detect from talking everything from Southeast Asia, Europe, and East and West Coast US, there is a real positivity about investing in, especially on the fintech world, because of this. We are digitally native businesses who can survive. We don't have this legacy like branches or PDFs, as we said earlier, to take care of. And so, be positive. As Stefano says, take money not when you need it. Take money if you're a good investor and you've got good people looking at you. Sell them. It's all about ensuring that you've got the right story and the right ambition. And also, just one word of advice to people, especially on the seed stage: don't worry about your plan. All plans are wrong at seed stage. They're 99% wrong, and they're investing in the team. And they're just seeing, have you got a plan? Yes, tick. Don't try and justify it. It's wrong. And as you get towards Series E and floating and stuff like that, then your plan has to be vaguely correct, because that's what you got to stand by and warrant. But yeah, the investment world is looking positive, and some people are surprised when I say, "Are you investing at the moment?" I say, "Of course we are." It's just like almost an offence. They've been accused of not investing at the moment. So I say positivity. Don't. The media may report differently, but when do any of us believe the media? To be honest. So believe in yourself. Pick up the phone and speak to people, and don't believe the media that's giving you a certain story, because they've got an edge to do, as sometimes is reality.
Yeah, investment positivity. Sigutė, do you have anything to add or to share your perspective how the funding landscape will change?
So, if honestly, my opinion is not that much different from what our panelists were talking about. Even looking into the Lithuanian fintech and startup market, recently we did see a couple of examples with really impressive funding rounds and money allocated for product development. So I believe it's possible. There is never a bad time to launch something if you have a good idea. That was always kind of my personal mantra. But again, I also believe that funding will be a little bit more complicated in the near future, but it doesn't mean it's not available. It's just the expectations from investors and from the markets will be slightly higher in terms of financial discipline, profitability, and etc. So yeah, my advice would be that if you have an idea, it's not a bad time. You just need to search for opportunities. There are definitely some available, and practical examples represent that.
I'll just add just one quick thing to that is venture capital has certain yields that investors chase. We're going to be in a pretty much near zero interest rate environment for the next 10, 20 years, thanks to devaluing of pretty much everybody's currency and quantitative easing that's going on at the moment. And so, and because nobody's going to on the stock market at the moment, there's a ton of money chasing venture investments, because at least it's getting may get some sort of yield. There's some risk obviously associated with it. And so in market downturns like this, it's either flight to bonds or flight to places to find yield. Asset prices, which are buildings and all that type of thing, massively deflated now as well. So there's I think money chasing good companies across the world, and because everybody's seen downturns and knows what a downturn looks like from 2007, 2008 to 2000, and has seen what the cycle investors and people who supply the money are pretty damn smart people, and especially venture, it's a long term. As you say, it's like you're almost getting married. You've got to take that sort of thing to the investor. You've got a 7-year relationship with them or more, and so that's you've got to think on. So the cycle will be moving up then, and IPOs will be back. and hence investor at this end of the cycle. Valuations may be affected slightly, but it's probably a good thing for all parties on it. And the sensible investors aren't predatory. They're very good, even-minded people. As you mentioned, Lakestar, people like that are just they do the right thing, because the entrepreneur has to be part of the marriage, if you see what I mean, going forward.
Yeah, actually, while we are on this topic, so I would like also to touch investment and funding, so are there any other ways for fintechs to get support and resources for growth? Might you have any other examples?
The British business bank's doing convertible loan notes at the moment, and they're quite company friendly because there's no cap on them. So from a corporate finance side, they're quite interesting. But it's nice to have as opposed to good investor money, because money from government is great and it's helpful, but when you get money with an amazing fund behind it and experience and playbooks, the venture money, say it comes at a discount to the government money, I take the venture money, quality venture money at any time, because the contact network and everything. British Business Bank is doing a great thing, and the government's doing a great thing to help, but it's money, and it's much better to go to people who will help you and generally interested in helping you and pushing you, and they're not just interested in your reporting every month to them of the shareholding and the price and everything, because that's of no value to us as entrepreneurs.
Yeah.
Cynical, I'm sorry, but that's true.
Stefano, maybe you have something to add, some examples from your experience.
So I agree with Nigel that smart money is the most important thing. Money is not all the same. It's difficult to make example because I think every jurisdiction is trying to help their own ecosystem in a different way. So we can make example of what the UK government is doing, but considering we are Lithuania Fintech Week, maybe it's less relevant for you guys. So I'm sure that your government is supporting the ecosystem the way they can. So it's difficult to say what other available methods are, because it really depends on where the company is based.
Yeah, location matters. Sigutė, might you have anything to share with us?
Same, nothing new. I mean, definitely there are various opportunities in various geographies. Maybe as a company, we didn't research it that depth, and we concentrated more on our kind of internal initiatives in terms of adjusting the business model to the existing situation, our products, and etc. But yeah, I heard good feedbacks regarding some measures from our customers themselves. I mean, from the small medium enterprises that really did suffer and needed support at that time when the lockdown happened. So, but yeah, it very much varied from country to country. So I guess location does matter. But we as a company, we utilized our internal resources, if I can say so.
Yeah, so actually this brings us to another topic, so we just touched funding and, even in the period like this, scaling is also very important. And, you are representing fintech companies that are already scaling in other markets. Nigel, you're currently, what we heard and read, you're focused on expanding your footprint in Southeast Asia. You also do have the US offering that is set to go. So what are the main challenges and advantages scaling Railsbank in different continents at a time like this?
Sure. I come back to scaling when competition's hurting is good. Our philosophy is a lot of Railsbank have been professional sports people, or military and others, so we like working at a very high pace. And I think now is we've upped our pace to another level to be able to grow ahead of the competition. That's just one thing as our philosophy on it. We also, if you read any business school book, they'll say don't operate on three fronts. Because you haven't got it's very difficult to do that, and it's whether it's business, military, anything, operating on three fronts is incredibly difficult. The way we get around that is we have an amazing team in Europe. Hopefully hire an amazing individual to lead us in North America who've worked together before as well and has a pre-baked team. And I'm based in Singapore. And we've always worked as distributed businesses. As our core team came together in 1996 when Swiss Bank were the first company I founded. So we know how to work and things. And when you've got pre-baked teams, know how to work together, know the downsides of everybody and the upsides of everybody, what they're good and bad at and everything, that enables you, I think, to operate on a few fronts. And the other thing we use, we just rip off Google and Intel. These are things called OKRs, which is just an approach of giving everybody the same direction and feedback fast on it and change fast. And we use OKRs for here's a company, a business unit of the company, each team and things, is to give that direction. So it's documented, it's clear, you feedback in it, you discuss it, but you don't have to be redirecting everybody the whole time, and that allows you to build global organizations. So we're sort of breaking the playbook a little bit, but I think we've got the right people, we've got the right market as well, and because US, we believe competition is all quite weak at the moment. Southeast Asia is coming out of COVID, and economically will come out faster than Western Europe, and Europe we're still growing 10% a month. So that's I think with a reasonable environment, and it's sometimes does feel like you've got to keep the wheels on as you're going at speed, but that's hiring come back to Stefano's point earlier, it's your team. If you've got a team that's experienced, knows how to go forward, doesn't overthink, very good leaders in the team, and that's what you give you direction and execution. And I'm quite proud of our team. We're all quite grey-haired. We're all ex-capital markets, so we've all come from trading floors and etc. in London and around the world. And we work at that sort of pace, and we've worked in international businesses, most of us, before. And that really does help. So you know how to have these conversations. Whether in the early days it was just on the phone, on the Squawk box. Today, video is a luxury. You see what I mean? And meeting is an even bigger luxury, I think, going forward.
Yeah, indeed. So the main drivers, there's talent, the team, and the philosophy of scaling, just to be agile to do that. Stefano, you will also expanding to the new markets, mainly in Europe. What is your experience? Could you share with us your advice on how to stay agile, grow, and find new customers?
Yeah, so linked to what Nigel was saying, the importance of the team and the quality of talent you have, it's key to any company. You are as good as the people you have in the company. So we keep growing. We are still hiring, and fortunately for us, but unfortunately because of the situation, hiring is becoming easier because there are a lot of talented people that they were simply unfortunate to be in sector that were more affected than the fintech sector, but they are extremely talented. Simply this crisis is affecting them more than maybe us. In terms of how things are changing now is definitely we have seen more demand of people to have flexibility around working. So working remote is becoming kind of the new normal. So we are scaling in a more distributed way. For what concerns the expansion from a commercial perspective, which is what you were asking, yeah, we are operating already in UK, Italy, France, Germany, Spain, Ireland. So let's say most of the European jurisdiction. And the only way to scale and grow at the pace we are doing is to remain focused and not try to do too many things and too many products. Just to do one thing and try to do it well. And this is applicable to COVID or normal time. It doesn't makes a huge difference. What we might be seeing more now because of the crisis is other companies maybe were less good at focusing, focus more on their core competencies and being more open to partner with tech company. So in terms of expansion, I think a lot of the tech company here today, we will see a lot more openness from a bigger company partner and work with them, because they themselves as a company, they are refocusing on what they do best, and they need us even more than before.
Yeah. Thank you for sharing this. Sigutė, might you could share your experience. How is it different or, similar to what Nigel or Stefano already said? How is the scaling of products, how the scaling of product situation is at SumUp?
It's similar in the way that we definitely treat ourselves as an agile organization, and people are enabled to deliver what's needed for the business success. But as discussed before, our strategy during COVID was to review the priorities, to review the product offerings that we have, and to concentrate on what is needed for our customers, taking consideration the lockdown. So we came up with various new ideas, and as I agree that reaction is here key. That there was no time to to strategize for 3 months and then start the development. So we moved very fast. We are also hiring during these times, because we still believe that the team is the key to drive further, to scale further, and we need the talent. But I definitely agree that hiring now is different. It's more complicated than it was before. I myself did some few hirings here in Lithuania, so definitely there's a lot of uncertainty between the market. So some people have concerns regarding changes in their careers, even minor things like interview processes. It's just different, but I still feel that it's possible, and we still need the talent to move forward, and that will continue being our strategy during these times.
Yeah. Just one thing following on from that, and it's probably a reflection of everybody on the call, is one thing we've tried, and I've observed other companies, is to go outside your borders. You've got to have a global ambition and a global mindset of a company. And within Railsbank, we have something like 44 languages and 127 people. So building diversity of culture, of people, of everything from day one generates a team with a global mindset, and that is, I think, core to also being able to scale in different borders. I've come across companies coming into Singapore from United States, for example, and it's to adopt to the Southeast Asian market. So I grew up there as a kid. Of very, very different from operating in Europe and the US. And the US is very different from even the UK, because the US, they may speak the same language, but fundamentally there's some very different behaviours. So having global mindset, and the fact that everyone on this call is from all different parts of Europe, is a sort of reflective of be global from day one, think global. And we started selling Access Global Banking with 5 lines of code back in 2016 when we launched our PowerPoint deck. And so we had global on the deck when there's only 2 of us, me and my co-founder. And we've been selling that aspiration ever since. And if you start with an aspiration like that, you can continue it as well. But operationally, you do need certain things. Working as distributed has its ups and downsides. We've learned to have like a centre of excellence for core of our platform, and that centre of excellence is in Lithuania. And we've got a fair-sized team there, and we're going to be growing and investing in that team. So that is just other observations of this tactics as well of how to be global, but also have centres of excellence for product, for engineering, sales from the marketing side, and then localization. And the other thing we did for globalization, we call parts of the product, for example, issue account, receive money and send money, and they're fairly international words. If you look at some of the competitors, then I'll pick on the US yet again, but they call things ACH payments. They call them the checking accounts, which we don't call them in Europe, but an account is an account anywhere in the world. So also your terminology being international helps you scale. You don't suddenly have to go back into the product or your documentation, which is part of the product, and your contracts and everything, and be able to change your language. You've got to have this core of international and a wrapper of localization. So it feels local, but with a sort of, you can localize a global product. We put a ton of thought into that before as we were launching the business, because our aspirations were to go global, and that's part of our core strategy.
Yeah, so actually this is a good advice, just be global from day one. Actually, I would like to touch our last points, for this discussion, and just to think about the opportunities what this crisis has brought to us. So Nigel, you have mentioned that scaling, is one of the opportunities in the time like this. Stefano, you're also scaling into the new markets. Sigutė, you're also introducing new products. So now just think for a moment, what opportunities this crisis has brought, not even to your businesses, but maybe you can share what fintech products will be on a high demand in the future. Maybe we can start with Stefano.
Well, I can tell you what we are seeing now in terms of trends. Obviously, in our sector, there are three, four trends that are very clear at the moment. Obviously, the lending space is significantly accelerating the digitalization. During a crisis, availability of capital is even more important than in normal times. So all the lending space is investing even more in becoming better at what they do. From a payment perspective, also we see huge demand. With open banking, you can achieve almost free payment, while the average cost per transaction in general is 2% whenever someone does a payment. So big companies that before were focusing more on the best user experience, now they understand that saving 2% on the bottom line is actually super important. So payment is accelerating the digitization. In general, banks were relying a lot on people going to branches. Now they realize that this might not be what the future holds for them, and so they are accelerating as well on the digitization of their own offering. So to make sure they remain relevant in a world that is going more in a Revolut or Monzo type of direction. And then lastly, as I said, the fourth trend is partnering up with people and focus on your core competencies is what we are seeing more and more.
Thank you. That's a great advice. Sigutė, would you like to add something?
Yeah, I'll keep it short. I think all the products that will stimulate businesses are the future. So as mentioned, loans, especially the micro loans, all e-commerce related product, payment facilitates, and easy access to bank accounts. I still believe this is a huge problem in some of the jurisdictions.
Nigel, and your last thoughts?
Just mirroring what everybody else says, anybody who's a digital native has massive opportunity going forward. in terms of my personal observations, in investing in or figuring out what's the next generation of Zoom and next generation of Google Hangouts, because one of the real observations is the workplace is now massively changed, and will, I think, continue to be that, and the tools need to grow up. I drastically missing what Google have a thing called Jamboard, but it's not hugely great and massively expensive. But if there's tools to let us go back and collaborate again with a wonderful thing called a whiteboard, but do it remotely. So it's slightly not fintech, but it's like tech to enable amazing collaboration. It's a massive opportunity for someone to fix that, because the world of working has changed. You go and see people.
Yeah, I guess so. With this last thought, I would like to thank you sincerely to our panelists. Thank you, Sigutė, Stefano, and Nigel, for the insights, your thoughts, and practical advices you already have shared. And thank you, everyone, for listening our live discussion today. And we hope that you find it inspiring and useful. And if you have any questions or comments, for our speakers, so please follow the company's profiles or the LinkedIn profiles, just to get the latest updates. And if you have any questions or comments, so just drop us a line and we will respond to you. So with that, I would like to say thank you and goodbye.